other companies.
Yeah,
And,
I do.
I was recently talking with the
Well,
founder, and I heard this from actually a couple of people recently when they were like, "Yeah, we don't really have a lot to share. We haven't made a lot of progress in the company, or investors might not find this like interesting." And they were listing off like 4 or 5 different things, and I thought as like as an investor, investors will think, but even for the founder, they were like small things like, "Oh, we're expanding globally, but we haven't expanded yet." I'm like, but that's still making progress towards it, and investors would want to
right.
know that you're taking those steps, and what are the steps that you're taking to get to that point. So even if they're small things, I think founders should still keep those investors updated, even if it's like a short email
100%.
like, "Hey, this is what we've been up to," or "Here are the challenges that we're facing." And you never know, like there might be an investor who's able to help out, or connect them with the right resources. So I think using like all these investors are there for your advantage, and how you use them and
Hmm.
how you um, are able to get support from them is how much you inform them. Like if there are challenges, asks, like having an investor report or investor email that goes out quarterly and be like, "Okay, here the successes that we've had, the challenges we've had, and these are like a couple asks that if anyone has help in." I think those are like good things to kind of keep investors updated on.
Asna, can you tell us and tell the viewers out there a little bit about your background so they get to know you a little bit better and basically how you ended up being co-founder and CEO of HubToss?
Yeah, so we launched HubToss in mid last year. And before that, I worked at Start Engine. So I was on the fundraising side, worked a lot with founders once they launched their crowdfunding round on Start Engine. And so I met a lot of founders working there. Prior to that, I worked at Plug and Play as a venture associate. So um, just met while I hosted events for their Plug and Play Connect program, bringing together investors and founders together. And I just love being in this space. And while working at Start Engine, one of the things that I and my other co-founder, who also worked at Start Engine, Tim, we both saw that investors did not have a lot of resources for due diligence when it came to investing in startups. I mean, you see in like the public market, you have a lot of these resources, like Bloomberg, even like Yahoo
Yep.
Finance, or in the private market for venture capital, PitchBook and Crunchbook. But with an equity crowdfunding, you don't have those resources where someone can go in, look for all the companies that are currently raising, do their own due diligence, learn more about the company all in one place. So we decided we both quit our jobs and build out HubToss. And a couple months ago, Caleb Naismith joined us as our third co-founder. So we've been a team of 3 just tackling on that problem.
Well, so you have a quant score which investors can use when looking at startups. So can you tell us what the quant score kind of consists of now as we shift to kind of figuring out how to invest and minimize some of the risks when investing in startups and how HubToss helps with that? Because I think that's really important. And like you said earlier, there wasn't a Bloomberg or like a pitch book for equity crowdfunding, right? Till HubToss came along, and HubToss does a good job, one, with the metrics, creating metrics so it's kind of easy to identify and measure the quality of the startup, but then two, also aggregating all the data so then you can do your own due diligence and make your own judgments. So can you go more into the quant score and basically how it's broken down per startup?
Of course. I can also share my screen and show the quant score
Yeah, that'd be
pages.
great. Do you see the share button on the bottom?
Yes, I do. I'm just trying to pull it up.
So I invested in my side note. I invested in my first startup last week, and I'm gonna
Nice.
make
I
my
would love
second
to hear more
investment.
about it.
I'm gonna make my second investment this week, but I've been using HubToss a ton to just research and like look through all the startups. So it's been awesome.
That's great. I'm so glad you're finding it helpful.
Yeah. So
Um,
this is the startup search screen for HubToss.
yeah, so I think this is like the
So
first spot for investors. We have so many free filters. I, try to get and thinking about what kind of companies you want to invest in, and you can add as many filters as you want. Revenue stage, revenue growth, net profit loss, and then going deeper into You can even sort by our quant scores, which I'll talk more about, financials, valuation, company and team. If it's a VC backed or has a past exit, you can add in multiple factors and it'll find companies for you that best match those that are currently live. So let's just jump into one and then we can talk more about it. I'm just going to go into here, the first one. So you can, this one's like
Consumer direct.
raising on Start Engine. And then we'll go on
So
the
what's
quant.
that? The chart on the bottom right, not the, I guess it was like kind of like the pie chart. That's the breakdown of how the company plans on using the proceeds they raised from Reg CF, right?
Yeah, that is. I think use of proceeds is actually one of the important things that I think most people don't consider.
Why is that?
Look at, because, okay, so if you're using like X amount, how are you really using that money? Are you using that money to like keep on growing and scaling? Like, are you putting money towards hiring, strategies, like, keep people? I've actually seen some companies put like their use of proceeds goes back into paying off loans, CEO salary, executive salaries. So
That
and I
doesn't
think
help with growth, right? That's
it
more
doesn't
just
help with
like,
growth.
yeah.
So
So
like,
is there a certain percentage you want to see of like the funds being allocated to marketing or to hiring more employees?
I think that really depends per company and, looking at the whole
Okay.
photo, about what stage they're at, how many people they currently have. If they're like a one-person team and they're trying to like, hire more people and keep going, that's a really good sign.
That makes sense.
But I've always been like a little hesitant every time I see someone's trying to pay back loans or salaries to CEO.
Yeah, because you want to see growth. You want to see investment and
Mhm.
growth, right?
I want to
So
see that.
So
Yeah.
for
So our
everyone listening, this is when you click the startup, and then this is the overview page where it has the website link, it has the LinkedIn link, it has the CEO name, it has the financial summary, which is a breakdown of valuation, revenue, rev growth, cash, short-term debt, uh, profit loss, net profit loss, and then also the offering details, right?
Yes, correct. And this is just the overview. So each of these tabs goes more into the financials and the offerings as well. So just quickly diving into our quant scores first. So each company receives a pass or fail metric for these four categories: valuation, financials, team, and risks. And for each, you can see clearly if it passes or fails that criteria. And we decided to take an objective stance on these, the things that we thought investors want to see. Like if a company's VC backed, it would get a pass. If not, it fails. And for each, there's also a huge description that goes over like what the criteria is, why it's important, and what the HubToss default is.
And I think the importance aspect, really breaking down the importance, helps investors because, one person might think one metric's more important than another person. So seeing the importance and seeing the definition of why it is important really helps them kind of adjust how much they want to weight that metric, that score, in the overall score of the startup. So I think
Yeah.
I really like that aspect.
I think especially for like newer investors or someone who's trying to put in their first couple or even first investment, and who
Me?
like you who trying to get in, you might not know what is important. So like going through these and be like, okay, like why? It at least gets you thinking about it.
Mm-hmm.
Like even when I was building and like going through each, I was like, okay, what is something that's gonna really help? So we have.
Can I ask you? I'm sorry, but with the quant breakdown, what do you think are your three most important metrics that you really look for in the startup?
Oh, that's a really good question. Um, I personally look at some of these risks ones. Has the company? I think complex corporate structure is something that always catches my eye. Is the company owned by like another company? Um,
Yeah.
I feel like if it is, it gets into those tricky waters where you might not
Hmm.
really be updated properly, or the ownership might be a little confusing. So I think making sure that you know exactly what you're investing in and what are the entities associated with it.
That's a great point. Like, with the complex structure, you really don't know. You might not know actually what you're investing in.
Mhm.
And when I was looking at here's was it filing, it looked like they kind of had a more complex structure than I expected. where each revenue stream had its own kind of company set up, and then it kind of looked like it all flew under one umbrella, but not necessarily. So that's a great point.
Yeah, even like monetary, like how is the like any money coming in? How does it get distributed? Um,
Hmm.
so just important thing to know. It doesn't have to make or break your investment, but it's at least good to like understand.
Yep, good foundation.
Hmm. One other thing is important that is key person risk.
What's that?
Is there like one person who is responsible for the entire company? So the entire company essentially depends on that one person. And if anything were to happen, or if the person has stepped down, the company essentially would not exist without them. So I think if it's
That
like
makes
a one
sense.
person startup or not a team that goes with it, no board of directors, I think it at least makes me question, okay, like how is that person committed enough to keep going? Or do they have like other avenues open as well that they might switch over anytime? Or, how committed are they to the growth?
Yeah. And then also too, you want them to stay healthy. So if you invest in the company, you might ship them a lot of vitamin C just so they can stay healthy as well.
Yeah, gotta make sure they're taking care of the health. And
Yeah.
I think
So
it's
this is the
mhm.
so with the quant score, you've broken it down into four aspects, right?
Yeah, so there is valuation, which talks more about like revenue per employee, price, sales, and these compare to the primary industry and the secondary. So you get a better idea of how it's actually comparing with other similar companies that are currently basing.
Okay. Yeah, that's a great metric.
Yeah, revenue
And
growth
so
and earnings per share.
so I guess which one of the four do you tend to spend the most time in? Valuation, financial, is it more team because you want to focus on like the team with the startup, or kind of the risks just to know what potentially could go wrong when you invest in the startup?
I think it's like taking all of them into consideration. Like I like to look
Okay.
at the total and then see like, okay, how really distributed.
Mhm.
I
Which the
wouldn't say
chart on
like
the
one
left
is
then
more
shows the distribution.
like I wouldn't say one is more important than the other. I think it's different, just really realizing what like some like revenue per employee might not exist for a company because they're still pre-revenue, but they
Right.
have really good other metrics. So it just really depends
Yeah,
when you
that
look
makes a lot of sense.
at. And then when you the
So this is
financials are also really,
so with this quant with the quant breakdown, this is good because one, they have the metrics, but two, it also kind of it does the work for a lot of investors so that they don't have to go through, because I can only imagine how long this would take if you don't have this resource, trying to go through and really breaking down all the specific metrics or factors that will play in the overall equation of the valuation, and then you have to then go into financials and looking into that. And so the nice thing I find with Uptoss and the quant score is that it's right there for you. So if let's say you look at like, oh, well, the current ratio, I don't like how they failed that, but then you can then double click on that and then go further down that rabbit hole of analyzing and really figuring out if it's a concern or not, how big of a risk it might be, or if it's not really that big of a deal, not really going to impact your investment that much.
yeah, I always see this as a starting point. So, at least it gets your mind thinking about what the direction of this company is, and then you can dive into each of them that are more important to you. And we go into some of these, like here we have the company really goes into the directors and officers, their positions. Are they full
Uh,
time? What are they making? It's also nice to see, okay, what is their salary compared to the revenue they're making, or
mhm.
like the assets and cash they have.
Yep.
And you can see in
I think
this case, the direction officer
this,
making significant
yeah, that
amounts.
the salary is really interesting because I didn't because you want to make sure the founder and the team are getting paid decently well, but not extremely well to where they don't want to do any work, right? There's definitely a balance and trying to find that balance. And then also too, I'm sure the salaries continue to adjust and get bigger as the company grows, it gets bigger. Kind of figuring out if you think maybe like if the founder is getting paid, I don't know, a couple $1 million and it's still, pre-revenue startup. I don't know if that's like a startup worth investing in,
Mhm.
right?
Agreed.
So
Yeah, so it's like
so this is
mhm.
you got the directors and officers,
Yeah, you see the company
and then
ownership. So it looks like this company is owned by like a
yeah.
trust. Also, just interesting to know. So they have patents, and which is a intellectual property, 5 approved patents,
Mhm.
and you can move over. And we have financial pulls from. So it pulls from the financial statements. You can see, they have a lot of current assets in cash, so which is a great sign. But they also have liabilities, $25 million in liabilities, which might not be nice when
Yeah,
you look at all of them together. The
right. It was interesting. I was looking at here's filing. They finished last year with I think $2 million worth of cash, which
yeah, I can pull up.
I don't.
Mhm.
Do you have here's quant score?
We do. Let's look.
Because I think that would be really cool to look into that. So with HubTosh, you have the quant score breakdown. You have all the financials, advanced financials, but then you also have a content channel, right? Content channel, and then you have some special features on HubToss like investing. Oh, what was it?
Yes,
Investing in a startup for less than a coffee, right?
we have some ideas as well, which I can, go deeper into. I really like them because it's like, okay, if you're like a newer investor too who doesn't even know where to start on investments, kind of like good um
Yeah.
see these like, okay,
Yeah.
companies that launched in the last 7 days, okay, at least it gets you started, or
Cheaper than a coffee.
cheaper than coffee, dollars.
Yep. Slow burners, Spartan founders.
Mm-hmm. Yeah, well, this is good. And once you click on any of these, it will search all the companies that are currently live and put a filter them, and it will give you all the companies.
That's awesome. I really like using it, especially now that I'm going to start investing in startups this year. I feel like it's taken me too long to invest in startups, and now I'm committed. And yeah, been using it a lot, looking at the breakdowns, the financials especially.
Yeah. I'm curious, what has been most helpful for you?
I think just aggregating all the data in one place,
Mhm.
because the biggest thing, at least from my perspective, from someone who hasn't invested in startups, trying to get into investing in startups, you know what you don't know, and then you don't know what you don't know, and the don't know what you don't know is a lot bigger than the know what you don't know. And so the biggest thing for me is I don't know what to look for or what questions to ask because I just don't know. I don't know what I don't know. And so having all this data aggregated, it makes me realize, oh, I didn't even think about, this aspect, this element when making an investment, and realizing how many basically how many more layers there are into making an investment than just looking at the product, looking at the team. And so the biggest thing for me is just seeing everything aggregated in one place. And it's really easy to input a lot of information and then make your own decision compared to if I tried to do it by myself. It would probably take me 20 to 30 times as long as it did. And with it taking that long, then it would be too much to make an investment just because of the amount of time I'd have to put in. So I think just having everything aggregated, and then yes, seeing the breakdown of the employee salaries too. Like I don't like that is I think that's very helpful. There's a lot of good data points that I would have no idea where to find, where to look for to get them that can really help me understand the investment I'm making and why I'm making it, or the investment that I'm not going to make and the reasons why I'm not going to make it.
Yeah, it's interesting you say that too, because I think when a company puts out its information, like the campaign page, it's like beautifully made, talks about all the good stuff that obviously you and a company wants to highlight. Here are the key reasons why, but all the negatives sometimes get like hidden in
Yeah.
very fine print text in like the Form C, which I feel like for any like regular person, it can be so much like really read through like the 100-page documents. And
Yes.
especially if you're considering multiple companies, that's like reading multiple 100-page documents
Yeah.
word to word. And there's so much jargon in there that even for me, like when I worked at Surgeon, I did a lot of stuff with like the Form C.
Yeah.
And when I first like went into them, I was so confused. Like nothing made sense, and I was like, okay, I don't even know how to comprehend this. And at one point, I was seeing like 5 or 10 a day. And then I was like, okay, now I just get this on top of my mind. So, like just even getting to that point, I can imagine like how hard it is for any regular person to like go through them and take
It,
out the more important information.
it feels like reading a different language just because of the kind of technicality behind how they make statements, right? And so reading it's I find it very overwhelming and can tell it's definitely one of those things where you just have to do it a lot and then you'll start to figure out, okay, I need to go to this section to find this answer, this section to find this answer, this section to find this answer.
Yeah.
So that's, yeah.
Yeah. And all like platforms have very different takes on their Form Cs as well. So it's not just
Really? How so?
just like the structure. Information is the same. It's like, as you said, like where do you find it, but the structure is different. Um, just like language is different. But one of the things that you said is I agree. Like I think the risk factor section is really important in offering, but it's filled with so much of like repetitive jargon, which can be really
Yeah.
hard to understand. And when you're like skimming through it, which I understand is like very important, like legal stuff that I'm sure like the SEC mandates that you have. But I'll feel like there'll be like a lot of repetitive stuff, and then there'll be like one sentence of the company is like undergoing litigation. I'm like, okay, that was important.
Yeah.
That should be at the top.
Yeah, it's almost like a treasure hunt, right? Where it's like
Mhm.
you're just kind of going through a lot and you're looking for that one sentence. You don't know if it's there or not, but if you miss it, it's going to be, it's like crucial to not miss it. So you have to go through everything and sift through everything. But when you were talking about earlier about how a lot of these campaigns that they run on the sites, like on the platforms, it's very much a marketing aspect behind it with how can you present yourself best possible. And I kind of want to showcase Here's campaign because I thought the campaign looked very good, very clean, and very it makes you want to invest when you see this. So let me know when you can see the screen.
I see it now.
And it's also kind of crazy to look to see that they had 2,500 investors
Yeah.
and raised 1.2 million. Like you look at this and this even this picture right here, this very much looks extremely professional. I mean, earn passive income by investing in vacation rentals like stocks. Who doesn't want to do that? And then you kind of you get the syndicate lead, right? Who's leading it, the team, the breakdown. So this is like it's kind of hard to look at this and to think, well, maybe this company isn't as doing that well, right? When you see it broken down this clean, and then also too, I think interesting. I don't know if it's a problem, but all these companies put in forecasts, and it's very misleading for a lot of people because they don't understand that a forecast is not accurate, but it's what they predict based off whatever metrics, whatever factors they put in. And I think Warren Buffett has a great quote where, forecasts are very rarely up and to the right the entire time. Especially like in business, like they're constantly fluctuating, going up and down, up and down. You just hope that over a long period of time, it's going to continue to go up and to the right. So, yeah, I just wanted to show that. And I think the more investors realize this is a little bit of marketing, and
Mhm.
that doesn't mean discount it. I think that just means ask more questions, even if it says it on the marketing page. Continue to ask more questions. Continue to reach out to the founder and ask the team as many questions as possible. And I think that will help minimize some of the risk when investing in startups.
Yeah, I think you bring up a really good point about those forecasted growth. I've seen some crazy ones out there, and I'm like, I don't know if you have like anything to support that. Um, and how are you really getting to it? Like if you don't even have a product yet, or you have made like zero sales, how can you really forecast
Right.
that you're gonna make like 5 million by like the end of next year?
Yeah, and then somehow they like 100 million by the 2027. It's
Mhm.
yeah. I think that is. I've seen a lot of that. I've seen some where they just do a 10x multiple year year over year, and you're thinking, right, well, you can't do that, but the chart looks very enticing when you see the chart and you see it just go like that. You're like, oh, how can I not be, enticed to want to invest in this company? So
They even word it like, here's what you would get, like, and it's like, okay, when you read through it, you're like, okay, this does not make sense at all, and it's very misleading. I don't even understand sometimes how that's like allowed to be posted on a campaign page.
well, I know with forecasts, you just have to, you can basically forecast whatever you want, or the accounting rules are you can kind of forecast it as long as you have some sort of reasonable input into the factor, but reasonable is like super gray to where like you can have a very optimistic forecast and that's still fine,
Yeah.
but it's not necessarily, it just gets in a very gray area where you're like, okay, well, I understand you could possibly achieve that being super optimistic, but you still shouldn't market it that way because there should be much more of a realistic approach than possible. But as we wrap up, what are 3 points that or 3 pieces of advice that you could give someone wanting to invest in a startup, to help, I guess, minimize some of the risk so that they maybe either choose the right investment or choose to not invest in the wrong startup?
I think my first one is follow the money in terms of if there is a company that's like going all in, we have raised X amount, and they're just like, getting millions of dollars or funding, and they seem to be doing one of those hot startups. Don't just invest in them because everyone's investing. Do your own research,
Okay.
take your time to be like, does this company really make sense? Look at their financials. Why are they fundraising? And all the points that we talked about, what are they using funds for?
Yep.
And HubToss is a good resource for that too. So deep diving on their campaign page, making sure that they're responding. Don't fall for FOMO. I also think a lot of,
Yeah.
as we talked about marketing, I think sometimes companies ads in marketing, and then that shows up on the campaign page, and the more marketing money you put, you might get more investments, but that's not
Yep.
necessarily people are investing just because you're a good investment.
Right. That's kind of like paying for their investment. I
Mhm.
know I've gotten a ton of Wiggle paid ads. I don't know if you have. I've gotten a ton on Instagram, like probably for the past 2 months. I'm, I'm like, all right, I've already swiped past this ad like 30 times already. I don't need to keep seeing it.
Yeah, I get a
But
lot of equity crowdfunding ads on Instagram.
yeah. So where can people find HubToss? And then what do they need to do to start using HubToss?
So our website is hoptoss.com. And so HopToss, a lot of the HopToss features like the quant scores are completely free for users. So all you have to do is create an account. We wanted to make equity crowdfunding due diligence very accessible for investors, which is why we put a lot of the research tools available for free. So all you have to do is create an account and you'll be able to get to the quant scores, company information, financials, all for free. And if you want to like take your investment a step further and want more like detailed features, we have custom algorithm where you can create scores and you can put in criteria that best match what you're looking for, and even give them a rating and a weight, so you can be like, okay, I want a company that has past exit, yes, no, and then give it like a 50%, and then there are like other categories that you can mark them against. I think that's really cool, to be able to create your own scores. And we have a HubToss GPT where you can have AI write personal investment
That's cool.
reports and you can talk to it. So if you're looking for an investment, instead of like doing all the research, you can just type in the company and say, write me an investment report for like Wiggle, and it'll give you all the information about it. And
That's
you can
awesome.
ask questions. So it's like really, really good. Simplifies the research process for you.
Well, and then where can people follow you and kind of track you and track the progress of HubToss?
Yeah, we're very active on LinkedIn. So LinkedIn's a great place to follow us. We post a lot of media articles as well, covering that are in the space launching. So if you want to learn more about here.com or MC Squares, we have articles on them and showing like why they did not succeed. So a lot more articles like that. You can find them on our LinkedIn or media.hoptoss.com.
Well, Ashna, Thank you for coming on. I appreciate it. Everyone go check out HubToss. I use it all the time. It's great for just aggregating data and looking through the data, looking at the quant scores, and really helping you make a more sophisticated investment decision when wanting to invest in startups. So thank you for joining us. For all the viewers out there, thank you for tuning in, and we'll see you next time on This Week in Crowdfunding.
Thank
So
you, Connor,
long.
for having me. I had a good time.
Of course. And hopefully you can be able to get out of the house soon. Hopefully the snow melts a little bit so you can do your thing. But we appreciate you coming on. Thank you.